Okay, welcome back, everybody. Today, what we're going to be showing you is how the dot-com crash pretty much relatively compares to what we're going through today. If you could see at our current cycle right now, we have pretty much four peaks that we have touched. Go back here, spread this out so you can see this is a chart that I've been showing you. But check this out: one peak, two peak, and this is the third, right? And then we've had pretty much 4 or 5 bottoms. But right here, if you can keep an eye on this, just hold this in your memory. I'm going to show you how it would compare to the dot-com crash right now. So you see how this touched, dropped, touch, drop, touch, touch right here. So if you look back in the 2000s, let me see if I can. There we go. Oh, it does that. Check this out. So 1, 2, you can call that 1, but I mean that would be the top, just like how we saw it. So 1, 2, this is 3, what we're seeing right now. Double top right there, you see that? And then it comes back down. And then it goes back up. It tries to break out, tries to hold, tries to break out again, is not able to make it through, and then comes crashing back down. It's very similar to what we're seeing today. Eventually, it came back and made a lower low and produced the bottom of the market, which is fantastic because we're almost there, but not yet. We're more so around this area right here. You see how it has the peak 1 here, and then peak 2 here. And then it comes back and probably going to go for another peak, a triple peak, and then drop. That's why I was making that video earlier, not to get trapped, because even though we did make a bullish divergence here to go up to run to the peak here, you're encountered with resistance on a bearish divergence. And when you do that, it's pretty much playing out almost identical. It's kind of crazy that it looks the exact same. I'm not saying it's going to play out. None of this is financial advice. Obviously, do your own research, but look at that. That's just freaky identical. Like right here. Look at that. So just because it does look very similar, I went ahead and also lined up the MACD because it is a very good indicator from the top all the way to the bottom on how it looked. So if you can tell, it was encountered by resistance right here. And look what we're doing. So let me drop this. See? Lower, lower. I'd measured the same thing on the other side. This broke under the bullish divergence. Now the bullish divergence has become a bearish divergence because it's resistance overhead. And it looks like it wants to roll over. Whether it rolls over or just hovers around this area and then eventually drops, that we will still have yet to see, because this is exactly how it's looking right now. Let me shorten that up. So obviously you remember what I just showed you at the top, then this, that's 2, 3. 3 is where it makes that double peak. It tries to drop, tries to break out again, tries to hold. Look at that. It's forming almost the exact same pattern. So if it does try and break out within like a day or two, say something happens with the Fed, and it does try and like push through here, great. You're still not, I don't believe you're going to break out. Like, I don't think we're going to go on a bull run. I don't believe that the Fed is going to pivot. Not financial advice, but if it does hold, more than likely it's going to try and just push, but it'll be met by a huge bunch of sell orders and a lot of bears looking to get in here and sell and push the prices down. So if it does go around these areas, let me draw it out. Let me see something like this, like I was just showing you, and then eventually down. If not, we just come here, hit, and then come back down. And the only reason I'm giving this option is because, let's see, it does line up more identical to the .com crash. And right now, I'm just trying to get an edge. What you want to look for is similarities in prior patterns, prior history, since the .com crash is very relatively comparable to what we're going through with Web3 and tech right now. I wouldn't take it off the table. So if we do see something like this, that would pretty much align with the .com crash. If we see something like this where it hits and then drops, same thing. It will try and make that third peak. Right now we have those two peaks before it decides to drop. If it does that, great. But if it tries to break back out, it'll just look a lot more in line with the .com crash. If it doesn't and makes its own drop, then at that point we're still game on. We're going to see that lower low at some point, whether it wants to play out now, whether it wants to play out in a few months, maybe January or February. But still, we are going to get that lower low. We're going to get that if we are able to pull off that soft landing, we'll see. But if we are, great. If not, let me move this over here. This is where we're headed here. I just hope that this doesn't, if it does something around these areas like this and makes that final low, I do believe we're going to come down here at some point, whether it's February or March or January. I do believe we are going to see these levels, but more than likely we are going to get a huge bounce. And then next year coming into maybe a hard landing. We'll see. We'll see what happens. But for now, just stay in tune with this price range. Don't get trapped. I showed you here the possibility. And at the end of the day, I just want you guys to make money. None of this is financial advice. Obviously, I'm showing you this. You're not paying for a subscription or anything. And yeah, so don't get caught up. Don't get trapped. Be looking forward to this once it does happen. And yeah, if you guys have any questions, leave a comment down below. But this is prior to the CPI coming out today. It's going to come out around 2:30 p.m. Eastern time. So just watch out for that. And I'll probably make an updated video later on today. But we'll see. Have a good day.